Nobody leave if you want to learn how to make much more money on your investments, or if you're a startup that wants to make better investments, because Kim has the secret. Welcome, Kim Polese.
Thank you.
You are pretty legendary as somebody who was early in a lot of some of the big trends in Silicon Valley, early at Sun Microsystems, coined the term Java, so I hear. Ran a company called Marimba that I think in 1999 went public at about $1.4 billion. And you know, you've been consistently setting up other businesses. There's one called Clear Street.
Mm-hmm.
You set up in 2010, but we're going to talk now about another one that you're chairing at the moment called CrowdSmart,
Yes.
which is reinventing using AI and the smart community, how to make better investments.
Exactly.
So in a sentence, explain what's different about CrowdSmart from lots of early stage angel funds, lots of micro VC funds.
Right. Thank you. And it's great to be here. Thank you all for showing up. The focus really is, with seed stage investing, the problem is there's so little data, and it's very relationship driven. You have to really know someone as an entrepreneur. You have to know someone in the venture capital world, otherwise it's very difficult to get funded, even if you have, you know, a high potential team and idea product. And so at the same time, you have the diligence process. The typical diligence process in a VC firm is also often constrained. What if you could tap into a network of people with a diverse set of experiences? Someone who understands, for example, the customer pain point, someone who's an expert in that particular area of technology as a professional investor, someone who's a deep tech domain expert on whatever the product is. What if you could create a scoring mechanism, basically to quantitatively score, based on all of that diverse input, that company's potential to return an investment, positive return on investment? What if you could apply then analytics and AI to create a learning platform that actually became smarter and smarter about identifying those capabilities or elements of that company that might lead to a positive return on investment?
So the team at CrowdSmart sources early stage companies through your network. You talk to the accelerators and the micro VCs, the best of them, and then you present them to a bunch of your signed up experts. So
Exactly.
you've got 2,000 or so members signed up.
That's right.
And then anonymously, 30 or so give their honest opinion about the startups.
That's exactly right. So it's based on the science of cognitive diversity. So it's been proven again and again that you get a more predictive outcome, a more accurate prediction, if you have a group of people with diverse backgrounds, experiences, and knowledge sets. So we're basically curating, pulling together a group of 20 to 30 people per startup, who then are able to see a pitch deck, see a video, participate in a live Q&A with the startup, and then start a rich conversation, an open-ended conversation where this is all done virtually. The question, initial question will be, do you find this a compelling investment opportunity? If so, why? If not, why not? What are your concerns? And then from there, we go into team, product market fit, traction, if there's any product in the market, IP, size of market, competition, all the things that you'd want to start to surface information on. And everybody's got a different set of backgrounds and expertise. I'll give you one example. A company out of UC Berkeley called Cocoon Cam, which uses AI vision technology out of UC Berkeley to detect sudden infant death syndrome. So it's a very fine-grained sensor that's instrumented on the crib. So among the people who did the scoring, we had AI vision experts, we had professional investors in the medical device market, people who would know how to put such products into a consumer channel. We also had emergency room pediatric nurses who would know if in the real world this would work. And so all of those people had equal weight in the scoring process. Often around the table, in sort of a typical venture funding environment, someone's voice might carry more weight, or someone might do someone else a favor by investing, saying, okay, to invest in this company because that person invested in their last deal, and so forth. So there are all these other relationship-driven considerations often that go on in traditional venture investing. This is a way of basically leveling the playing field in terms of input. Everyone's voice has equal weight and also has a different perspective. A conversation emerges, and we're actually using natural language processing to identify themes, like about maybe the go-to-market strategy for this company, for
So
example.
why would the pediatric nurse and the computer vision expert give up their time
Yes.
to vet those companies?
Exactly. Well, today we actually enable people to invest as little as $1,000 with no fees and no carry. So let me take a step back. We actually raised a small fund to test the prediction accuracy of this technology. And so we've invested in about 20 companies over the last 2.5 years. The people who are doing the scoring have the opportunity to invest as little as $1,000 with no fees, no tax on investing that money. So they're getting access to a high-quality portfolio of startup companies. Now, if they don't want to invest, if they're not an accredited investor, there's also a set of incentives. One of which is just learning. You learn a lot from participating in these conversations. Some people do eventually want to be angel investors. And then we're rolling out a whole member economy platform basically that rewards people who are either very highly engaged with the platform, have a high degree of accuracy in their predictions. So we're creating also a way to reward people in a variety of different manners on their engagement and their success rate predicting startups.
So if I want to invest $1,000 now, I can go to AngelList, become an accredited investor, and join a syndicate, put some money into a syndicate.
Right.
Why would I come to CrowdSmart rather than AngelList?
So what we're doing actually is working with the world's accelerators and angel groups and micro VCs. So in fact, AngelList and others have built amazing networks of investors and advisors and domain experts. This is a way of helping those kinds of organizations connect with each other better, surface more information, create actually a quantitative scoring model, a scientific approach to what they're already doing. It's basically adding value to what already goes on in the world of angel investing. It's just, this is a way to scale it, to create more investor confidence, so you can unlock more capital to flow to the most promising entrepreneurs everywhere, not just in Silicon Valley, in fact.
As a member, I commit my time in exchange for access, but also no fees to invest.
Exactly.
And you've so far vetted about 130 startups. You've put some money in how many so far?
We've put money in 20 companies.
And these are not huge checks you're writing?
No, typically about 100K, 100 to 150K. Again, to really test out the prediction accuracy. And what we found is over the last 2.5 years, about 80% of those companies have gone on to raise another round of funding at a higher valuation.
Which is much higher than the industry average.
It is. It's about 4 times higher than industry average. The rest are actually fine. No one's gone out of business. And, it takes time. This is a small data set. It's early days, and it does take time to determine whether a company ultimately will succeed. However, it's an interesting indicator. And the other one that I get excited about is 40% of these companies are women-founded or women-led. And that's, again, about 10 times higher than industry average. So kind of extraordinary numbers that we're excited about. And again, cautiously optimistic, but we think this is why if we could take this to scale globally, you could tap into this abundant talent that's everywhere, right? But how do you get the capital? How do you attract the capital to that talent? And then once that company has startup funding, how do you surround them with the expertise and advice and coaching to mentor them to success and to basically help them succeed?
So you're using the network, the crowd network, to overcome the biases of traditional early stage VC, which tends to back men mostly like the VCs themselves.
It's very much, the VC business is very much relationship driven. So we think if we can reduce ingrained bias, because there will always be some degree of ingrained bias, but if we can reduce it, so it's not just relationship driven, it's not who you know, it's what you know and what you're capable of, we could really move the needle on that potentially.
And we've heard a lot about AI, from Werner to many of the other sessions.
Yeah.
You talk about AI optimizing the investment decision making. Explain specifically how the smart machine works.
Yeah. So 2 important areas. One is the use of natural language processing to identify themes in open-ended conversations. So what's happening is not survey questions. It's actually a rich conversation over a series of 2 to 3 weeks during the scoring process. And so NLP basically helps us identify what are the most important things people are saying about this company. What are they excited about? What are they concerned about? And then we apply Bayesian learning techniques to actually analyze how people's opinions change once they learn new information. And this is a very important part of how decisions are made. When there's new data, when there's something revealed that you didn't know before, you might change your score. And so we're using analytics around enabling that collective intelligence conversation to happen, and then a set of algorithms that create a predictive analytical model to start to inform the platform over time and make it more and more accurate based on what we're learning during these conversations. What are the patterns that will lead to a higher probability of return on investment, for example?
So essentially, you're trying to create a scientifically more objective way to determine which companies have a higher chance of making it.
That's right.
Partly involving crowd psychology, but partly involving machine analytics.
That's right. Exactly.
What's so bad about the current model of early stage investing?
Well, the current model is actually very vibrant, and a lot of great companies get funded, and Airbnb and others have emerged out of that process. Mm-hmm. The challenge is getting that scaling everywhere. There should be Airbnbs coming out of every region, every country around the world. More people should be able to participate in the process of investing in those high potential startups, not just a few. And then the diversity of what gets funded, again, going back to the talent is evenly distributed everywhere. It's the capital and the opportunity that's not. So what if we could bring this whole process of angel investing to scale and tap into those networks and relationships that already exist in the angel investing world? So we partner with accelerators and micro VCs and angel groups, and also family offices and corporate VC are getting more and more active in startup investing, but again, they lack the diligence resources often. They want to plug into a diligence network where they can get a lot more expertise very quickly, reduce the amount of time to evaluate a startup, and actually hopefully get better outcomes ultimately.
So we've talked a bit about diversity. When I was reading about your career in coverage over the years, I found diversity was one of my concerns. You were often compared with a few other women who had made it to senior levels. You were the Sheryl Sandberg of tech, the Marissa Mayer of tech, the Madonna of Silicon Valley.
Oh, Lord, yes.
And quite often, it seemed that you were being judged not for what you were achieving. You're a Berkeley trained astrophysicist, but you were being judged by what you were wearing or being a woman on the board. Forbes had to apologize for a piece 7 years ago where they made comparisons between you and Sheryl Sandberg. How much of a burden has it been being seen as a woman in tech?
Well, I never think of it. Obviously, none of us do. When it comes up, I think what a silly distraction, and then get the focus back on what I'm actually doing, what we're doing together as a team, and what's interesting about where the world's going, and all of the stuff that actually is interesting. I remember when I co-founded Marimba, and there was all this frenzy about, oh my goodness, a woman CEO, how could this happen in tech world? I remember thinking how silly it was and how it would go away. Within 10 years or so, we'd be past this because there'd be so many women founding and building companies. Well, that's certainly happening more and more, but not fast enough, I think, because there's so much potential in, just economic opportunity and GDP growth and all the reasons why we know getting more diversity in investing and startup activity is a good thing. So that's one of the reasons I'm doing CrowdSmart. I mean, that's, sort of first half of my career or so, I really focused on pure tech, whether it was AI expert systems, my first job out of college, or Java, software infrastructure at Marimba. And then I decided to focus tech on solving big, hairy problems. What's really tough to solve in the world, and how could we apply tech to actually having an impact on that?
So last question. You are, to many people, something of a role model for somebody who's broken through the traditional ranks of entrepreneurship and hard tech entrepreneurship. Give a little piece of final advice, particularly to minorities, to women who are entering this world and maybe kind of put off by some of the attitudes and assumptions they're facing.
So I'd say certainly, and this is advice I'd give to any entrepreneur, but persevere. I mean, it sounds corny and everyone knows it, but it is the one thing that differentiates the people that succeed ultimately or not. And you never know who you might meet tomorrow. So I'd say yes to every opportunity that comes your way, even if it might not be obvious why that might be a good thing to do. Yeah. So those are just a couple of pieces of advice that I give myself all the time too.
Thank you, Kim Polese of Craftsmart.
Thank you, David.